What's going on, everyone? Sal back again here with another video. Today I want to talk about the S&P 500 and where it could be going. I mean, right now we've got what looks to be the beginning of a possible rally. That's definitely not the candlestick you want to see to give you confidence in that rally. If you use a moving average strategy, the best probability is when you have a second day closing above the target moving average. White line is 10. The purplish line here is the 25 moving average. So we see how wide they were between the both moving averages. That gives you a visual indication of how strong the move was to the downside, right? I came on the 7th, told you not to buy this dip buying that occurred here on the 6th. The next day I made that video, told you not to buy it. We lost another 15%. Awesome call. I really hope you guys went short there. Now, for those of us, again, who are on moving average strategies, tomorrow is very, very important because you're going to want to know and see whether or not we clear, right? We stay above 243.23 on the SPY. Now, you've already gotten, let me clear that off. You've already gotten, bull signals from many other stocks. For example, if we go to Spirit Airlines, right, closing above the 10 moving average today. If you go to CarMax, which I believe is KMX, right, you already gotten that signal. Oh, no, actually you haven't gotten it just yet, but boy, what a move, almost a 50% move higher. So some stocks haven't given you them just yet. Actually, Microsoft did. Let's see, Apple real quick. Let's take a look at Apple. Not yet. So, again, tomorrow is going to be a very important day for that. Very important day for that. Now, if you're on a shorter time frame, yes, you've already gotten multiple hours ago. Let's go on the hourly, right? Whether or not you should stay in. But now that closing, boy, you want to talk about a very bearish close. You almost lost the 10 moving average. You also lost the 60 RSI level. So that almost is a clear indication to go ahead and get on the other side of this trade, but we're still waiting for one more candlestick to determine that. Now let's get back to the daily here. All right, so what's going to happen here is either we're going to continue to go higher back into the range for higher prices on the exchanges and fail this 60 RSI, or we're going to blast right through that. So how do we know when we're at some really scary levels? Is that we are way beyond the point of using fundamentals. So we got to go pure technical and we got to play close to the price action. And the way you do that is by setting some very interesting levels at recent highs that were green days. So we would look at what are the recent green days. Obviously today and that day on this March 17th, we'd go and set another one here, another green day at 271.59. That's the way you've got to play this at this point because you don't have any other idea about what level could work, right? This is not enough days for you to say, oh, well, that's support, that's resistance. No, you basically have to show where traders had some hesitations and weren't willing to go higher. So those are now your new resistance levels, and you've got to accept that. Now for the downside, you just basically have to say, okay, if this 10 moving average doesn't hold, then I've got to be willing to go short there or sell some calls there because that's really all you've got to determine whether or not the market wants to be a buyer or wants to be a seller. That's really all you have. This is a very imperative situation that we're in. I don't know if I even said that word right, in the market right now. If you don't have to be in the stock market, don't be in the stock market. Just go to cash, because I'd rather you just sit out and wait till the VIX comes back below 50, than to be trying to be a day trader right now and lose your ass because, this market is still very, very scary. These 2 days on the VIX are not very encouraging, regardless of what we saw today and yesterday on the markets. This VIX should be below 50, right? If you want to be a trader who's confident about the upside move going on right now, we should be below 50 on the VIX. And the fact that we're not below 50 on the VIX, the fact that we actually ended with a VIX up 3.7% is not encouraging. All right, it is not encouraging. So let's go back to the SPY. Again, those are the levels you want to look at for the upside move to possible any resistance. If we go on the hourly chart, you want to know, do we get a second bar below this 10 moving average? That would confirm not only the loss of the 60 RSI, but hey, maybe the bulls are just not strong enough to make this happen. We do have something in Congress right now that they are working on this stimulus bill. That's going to be a pop. That should be a pop. That's when I would love to sell more calls, is whenever the high of that action comes into the chart. But as of right now, this is a market you still have to play relatively far away. I'm still selling 3,000 every chance I get. Every chance I get, I'm selling the 300. Well, in this case, SPY, to be 300 calls, right? 15 days out, 30 days out. Those are the kind of plays I want to do, because I understand that we don't have any cure for this virus right now, and things are going to be getting worse in terms of the spread, the number of deaths, the number of infections. This rally is very much in jeopardy with the kind of news that's going to be coming out in the near future. So, to answer your question, should I be buying this rally? The absolute answer is depends on your time frame. If you're a short-term trader, 1 hour, 30 minutes, you've already made a killing on this market, right? If you are someone who trades a daily chart, you need your trades to go several days to make happen, right? For you to be in profit. This is a rally you have not gotten the permission yet to purchase, right? You have not gotten that permission yet to purchase. In fact, you were unable to maintain the high of the day on days like this, where you're coming from a real low like we were recently in the market. You got to see confidence in those candlesticks. And this is not a confident candlestick whatsoever about a possible upside. There's still so much hesitation in the markets. You can see it in the 10-year yield. In fact, the 1 month and the 2 month yields already turned over, and they are now negative, and that should eventually come into the 2-year and the 10-year. Right now, I'm looking for the 10-year yield, and this is another indicator of whether or not, how things are going to be. As you see here, we're just basically holding on to dear life, because once that level breaks, you're going to see much, much lower prices. Much, much lower prices. We are where we are right now because we did bounce off that 0.77 level, and that gives traders a little bit of permission to go into some of those equities. But if we start to lose those yield levels, it can get very, very ugly. But you are fighting a Fed that has came out and said they're willing to spend whatever. Fed announces unlimited bond buying to stimulate companies, local governments. So they are willing to spend whatever. They're willing to buy hundreds of millions of dollars in mortgage-backed securities, hundreds of billions of dollars in public bonds, possibly. They might actually go out and just buy equities. They are looking to change the rules to get us in a situation like Japan. Japan, their Federal Reserve can buy equities. They can go into the market and buy just like a normal person. That is a violation of every standard that the Federal Reserve was created to do. But at this point, all the rules are out the window. And they told you that when they mentioned recently that, they are willing to print unlimited amount of money. Unlimited amount of money. And I've got a podcast coming out soon now. We'll explain that, and I'll show you why Neil Kashkari is wrong on that. But more importantly, you don't want to be on the other side of that. All right. You don't have enough money in your account to be trying to short the market. If it continues to go higher, you don't want to be short. All right. Because you don't have pockets deep enough for how high this could possibly go if they're willing to spend unlimited amount of money to keep it going higher. This could be the manipulation of a lifetime. This could be the move that, again, all stores are closed. Most businesses that, are closed, but yet this market is just, that's manipulation on another scale, folks, on a whole nother scale. All right. But that's why we have a market of buyers and sellers, but some buyers are big enough to buy all the sellers out. And that is why we use charts and moving averages to, create a systematic way of being in and out of the market, taking our feelings out of the situation and just being programmatic with it. All right. So if we got to turn into put sellers, then we'll turn into put sellers as long as everything confirms as it should. It's your boy Sal. Again, this is the move we've all been waiting for. I put out a video on the 7th, told you there's going to be a run that's going to convince everybody that the bottom is in, that we're going to higher prices. And if we indeed get to that 60 RSI and fail, all right, if we indeed get to that 60 RSI, we'd probably be somewhere around here or whatever, somewhere around here. If we get to that 60 and fail, that will be an incredible shorting opportunity. We're going to blow past that 20 to 220 low. But if we break through that, right, and I'm guessing that could be about to 271, probably 275. If we break through that and keep going, ladies and gentlemen, with the coronavirus killing thousands of people in the hospital, we could possibly see all-time highs back again. This is the manipulation of our lifetime, but you've got to trade because you've got to make money. That's the bottom line. All right. Don't let your feelings corrupt you. Follow the moving average. Be systematic. Learn more at nodirectiontrading.com. Short-term traders, blackboxstocks.us. You guys have made a killing over there with those short-term moves the last 2 days. Until next time, trade well.